On Friday, the Dow drops 57 points. My name's D7, here at Grok Trade. It's the weekend edition. This video is good to Sunday, February 28th, 2016. And this is what we're going to be doing on this video. We're going to be looking at the SP 500 and the Nasdaq. We're also going to be looking at the banks. Furthermore, we're going to drop down into looking at the U.S. Crude oil and maybe the U.S. dollar, but crude oil, and then we're going to get into precious metals and take a peek at the VIX. We're going to be looking at the daily, weekly, and monthly videos. So this is going to be a very large, very comprehensive video with a ton of information. Before we get into it, make sure, if you haven't done so, go to Free Online Trading Education. Get the free tutorials. They're free to you. Get those. If you go to Grok Trade, the information here is a little more advanced. This is for the savvy traders, but for the free trading tutorials, click on this link. Let's get into it. This is the SP 500 ETF called the Spider. Repositioned all my lines, reestablished my numbers. I feel very good about what we have as far as technicals go. On the bigger time frame, you have two blue lines. Both are slanting downward. We're in a down trend, making lower swing highs, lower swing lows. Most recently, we have more aggressive movement of price action heading down. You'll see two red lines heading down, 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 down. We're at this level of support. We're starting to rally higher. We have big resistance around this 200 mark or the 2000 mark on the SP 500. So remember this. We're going to look at the weekly chart now. So remember that 200 mark or the 2000 mark. The weekly chart. How do you know it's a weekly? You can see the big W in the background. Spider W for weekly. Always remember, if you have a hard time seeing the video, down the right hand corner down here, click on high definition and click on full screen so you can watch this in great clarity. So this is a weekly chart. Every bar is 1 week. We've been going higher, 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 higher. We roll over. I called for big time warning. We have since crashed. The last couple weeks have been bullish, up, 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 up. But volume has been very low, guys, on the uptick. We're going higher. This is just nothing more than a bear pullback on the weekly chart. However, if we go higher, higher, if we get up here near this area, that would be the falling 20-week moving average, and a major trend line puts us right around the 200 mark or the 2000 mark on the SP 500. Big time resistance, a great area to look to sell into. I'm going to go into a monthly chart and show you a major problem with the bearish plays here, or it could be a big problem. We've been heading higher on the monthly chart. Again, you can see the M in the background for monthly. Every candlestick is a month. We're going higher, 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 higher. Then we started to drop. I said warning, 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 and we've dropped. We popped up. We got a lower swing high, and we start to crash. Technically, this candlestick, this month that we're in, is still dynamic. It's not yet static. It's still moving. This is a leap year. We still have Monday to go, February 29th. But if we have anything close to this, which I think that will actually tick higher and close out on the month with a even a more bullish hammer here, but we have a hammer and we have a tweezer bottom on a monthly chart. Tweezer bottoms are exotic trend reversal patterns, candlestick reversal patterns that are very powerful. So if this is a true tweezer bottom, this could get bullish and quickly with huge candlesticks like this blasting through all this resistance, heading higher. If that happens, you do not want to be a bear in that market. So the monthly chart is hugely important to me as a highly skilled and savvy technician, because this will trump the weekly chart and the daily chart. Even though as a swing trader I'm trading the daily chart, the monthly chart I'm watching like a hawk, and I want you to understand this. Pause the video, go back and re-listen to what I said here. Don't let that get by you. We're going to look at the Nasdaq here. Nasdaq, we'll start with the daily chart. We have a broadening formation as far as a trend. That means we're just going sideways. The price action gets chewed up inside the moving averages. You can see the moving averages, and it's hard. Look at the moving averages like sticky spider webs. It's hard for price action to release down below them or to get above them. We're just moving sideways. Again, this is the Nasdaq daily chart. A lot of choppiness. At this area, we've been going higher, 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 higher on very low volume. But this could turn into an inverted head and shoulders if it pops back down here and then rallies again at the 1,000 mark or the 100 mark on the Qs. And rallies, that will be an inverted head and shoulders trend reversal pattern. I would expect to see that rally back up here to these resistance areas. However, if we chop around here and then start to break down and drop, I expect this area to be a support area. Let's go to the weekly chart on the Nasdaq. This paints a more clear picture. We've been heading higher, 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 higher. Warning, 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 because we go into a rising wedge. We break it down from the rising wedge. Now we start to rally, rally, rally on little volume. I see a big area of resistance here. This big area of resistance is 109 area, or 1090 on the Nasdaq. Big area of resistance. So this would be the area to be looking to sell into. If I go to the monthly chart, look at this. You can see if we go higher, 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 we have resistance at 1008 or 1008 area or 1080. Big time area of resistance. Now this, we have a dragonfly doji. If it does pop, I see major resistance for it to contend with. But again, if the markets get very bullish and blast through, then you do not want to be bearish this market. But the major areas of resistance have been broken. We're below all major moving averages. So we have a much better chance of the markets continuing to break down for 2016. Okay, now what we want to do is look at the banks. Very important that we have a good understanding of the banks. Here we have a falling wedge, which is more bullish and is bearish. We have this inverted head and shoulders. You got shoulder, head, shoulder. The neckline has been pierced, and that was pierced on Friday. So that tells me that we should only go higher, but once we do, we're going to smash our head into this resistance coming across and this resistance and the falling 50-day moving average. Again, this is a daily chart on the banks. But overall, banks have a good chance of more upside potential the next few days for sure. And if I go to the weekly chart on the banks, we've dropped. We've been crashing and burning. Now we're starting to head higher here. But this is just a bear pullback on the weekly chart. I see this popping up, looking for a sell opportunity, and see this head back south. If I go to the monthly chart here, we drop. If you notice, the Nasdaq or the banks, neither gave us a tweezer bottom. It was only the SP500 that did that. So, but after this drop, we do have a hammer on the Nasdaq and a hammer on the banks, telling us that we have a good chance of a rally here. If that happens, the next week could be very bullish going into next week or the next 2 weeks. But again, this is the monthly chart. You can see the M in the background. I'm going to go here, take a very quick look at the US dollar, because Friday we had a sizable jump in the US dollar. Look at this. Boom! Usually after a run up and you get a big candlestick like this, you get a big sell-off in the US dollar. If we get a big sell-off, that's going to help bolster the market on Monday and Tuesday. You'll see stocks go higher because the US dollar under pressure. That's what I expect to see. If I look here at the weekly chart, we're in a rising wedge, which is more bearish and is bullish. But we did pop up here. We do have upside potential before we hit this resistance level. But I foresee this thing breaking down at some point here. And if I go to crude oil crude oil, you can see that we're trying to put in a bottom, inverted head and shoulders, look for upside potential here. However, there's other indications out there. If you go to Facebook and go to Facebook/Grok Trade, I posted an article from Bloomberg saying that crude oil is not going higher and should only continue to crash. They do not see any sort of bullish activity in crude oil. They build a very good argument on that. However, technically speaking, here's the weekly chart. This dude is a buy. Huge volume, capitulation at the bottom of a falling wedge. You always buy that. Look for a big pop in oil. But again, there's underlying factors here when it comes to this commodity that we have to take in consideration. So I'm not playing oil at this moment, but everything in me wants to load up on it, just technically speaking. If I look here at the monthly chart, same thing. Monthly chart, this thing is just begging to pop. Coiling spring ready to go boom to the upside. But let's get into precious metals. Precious metals, I called it. Sit down here, look for an area to buy, and then boom, this thing took off. Now we're in this tight little bullish pennant. This is a beautiful bullish pennant, by the way. Gold is set up for another major rally to the upside, but has big time resistance to deal with. I would need it to get clear the 119 to 120 mark to really consider getting into this, and I'd want it to happen on big volume, but we're at a resistance point, so I wouldn't want to buy it now because it could hit and then drop down. You need to wait for a confirmation breakout. And let's stay back on gold. The weekly chart on gold, boom, now it's building a high base, looking pretty good here. If we can continue to build this high base and rally upward, there could be great opportunity here. And then the monthly chart, look at that. I said buy, and then boom, this thing has taken off and has done so on nice volume. Very, very nice. And for you guys that are holding gold and silver and continue to do so, you're going through a lot of turbulence, but it's paying off handsomely. You're doing extremely well. And for the silver people out there, silver took a major hit on Friday, just a big drop, boom. But it's still, we got this nice bull pullback. This thing could be a buy territory. We're caught up in the moving averages here, but looking forward to upside potential here. We're in a huge triangle that could consolidate, but we're looking for a breakout to the upside. If I go to the weekly chart, what's happening here is perfect. We have this falling wedge, we had the breakout, now we're pulling back to support. Look for a buy opportunity down here. This is a great time to be starting to look for a buy opportunity. And if I go to the monthly chart, again, you can see the M back here for monthly. This thing for the month has popped. Now it's pulled back. And hopefully this thing will continue to go higher. And this is its low. And the VIX, a lot of people don't know what the VIX is. The VIX is a fear indicator. It lets you know if there's fear in the markets. And the higher it goes, the more bearish the market is. So we've been dropping on the VIX, and that means the markets have been bullish. But here's the problem I want to share with you. We're in this uptrend on the VIX, meaning fears in an uptrend. When we hit this line, we popped up. We're at that line again. We had this gap down run up with a close above that area. If we go higher, now this line should not be drawn yet. The reason I'm drawing it right now is with the anticipation that we will pop higher. If in fact we go higher, then I'll feel much better about this line. And if that happens, we have a ton of upside potential right here. And that means if the fear goes up like this and goes to this area of resistance, the markets will be falling out of bed and crashing and burning. That's why I wanted to show you the VIX. And if I look here at the weekly chart on the VIX, we were down, started rolling over, and now we broke an area of resistance, and that's where we're at on the weekly. On the monthly VIX, you can see down, rolling up. Now we're on the up point here. We're still below the 20-month moving average, but if it pops here, the markets could get very bearish and quickly. Okay. Maybe some of you don't know this, but we are trading mentors. and you need to be making money in the stock market, we should talk. Go to groktrade.com, click on Trading Mentor to learn more. If you like the video, like it. Catch you guys later.